Joining me now for a closer look at what's playing itself out in that market scene is Greg Katzenellenbogen from Sanlam Private Wealth. Greg, always a pleasure and a good afternoon to you.
No.
All right, Greg, keen to get your thoughts on what we are seeing on our screens today. A little bit more green than red on the local bourse, a little bit of more red than green in Europe. What our markets are contending with this afternoon?
Well, it's always good to see green rather than red on the screen. In South Africa, our all shares up about just under 0.5%, the top 40 as well, but the resource index, that's up nearly 2.5%. So you're starting to see around the world commodity prices and improve. Europe, generally it's the mining stocks this morning that are doing well, but markets are just marking time for tomorrow's inflation numbers coming out of the States. That will give us an indication of whether the Fed is still on track for 3 interest rate cuts or whether they're going to dial back on that. So it will be important. It's quite important number tomorrow to see how US inflation is doing in the face of an extremely strong US economy.
We are seeing just more and more hawkish commentary coming out from different corners around the world, Greg. I'm wondering what your thoughts are here. We've seen, for instance, the head of JP Morgan, Chase, come out to say that it's very possible that we may not even see any interest rate cuts this year. Do you think this is something that's a possibility and something that markets may have to contend with, depending on what the data tells us?
Yes, I'm not sure if I agree with that view. While inflation is remaining elevated and quite sticky, I think over time, if you look at one of the main components of that US inflation is what they call shelter and rental prices, and that have been coming down. So I do expect inflation to come down. I don't say it's going to come to the Fed's 2% target anytime soon, but I think it'll be at a level where the Fed is comfortable with that. But I think the key remains to see if the US economy remains this strong. If it shows some sign of weakness, they'll definitely start cutting. But as things stand at the moment, the Fed still say that they will cut 3 times this year, about 1/4 of a point for each. But I think that you would have to see inflation really motor ahead again for the Fed to actually raise interest rates and not cut them this year. And that's not a scenario that I think is likely.
And the first quarter, and I think maybe earlier in the year, Greg, we were also contending with tensions in the Middle East and the impact that that may have, firstly, on our cost environment, on inflation, but even on the price of oil. I'm keen just to get your thoughts here. And now that we're, well within 2024, it's become very clear that that's had a minimal impact on markets, on the price of oil, and even inflation.
Well, I think, that there's talk now that oil will go to $100 a barrel. And if that was to happen, then people will start recalibrating their inflation numbers. But we mustn't forget it's not only because of tensions in the Middle East, but the US economy remains strong and China is starting to show some signs of growth. And that means that demand for oil is also picking up. Obviously, if the price, I think the world can handle $100 a barrel oil if growth remains decent. But I think if it was to go much higher than that, that would be a problem. But you are starting to see that if it's to be believed in the news that maybe the tensions in the Middle East would be ratcheted down somewhat over the next few months. We'll have to see, but for the time being, I think that the demand is what is pushing the oil price up. There does have 1 or 2 days where there's tensions in the Middle East and the price reacts to that, but you can see that the oil, it soon settles down after that. But I think the primary reason is that the Saudis and the Russians also, while they would like a high oil price, they know that if the price was to head well north of $100 a barrel, that will crash demand for that, and that's not something they want to see.
Also keen to get your thoughts on what we're seeing with gold, certainly enjoying the kind of strength that we haven't seen in a while, and what that might happen in a less dovish, or in a more dovish market, there, Greg, as we do see, of course, that central banks have been at the center of this gold boom.
Well, I would say certainly the Asian central banks have been very active buyers, and the Russians as well. Generally, gold moves in terms of real interest rates. That seems to have broken that connection at the moment, and also moves in times of stress. But I think what's happening is that there's a school of thought that believes that the Chinese currency, China will have to devalue their currency because they are under pressure from the Japanese yen, because as the yen remains weak, it makes Japanese exporters very competitive. That's harming the Chinese. So while China will be labeled a currency manipulator if they allow their currency to fall sharply, you can't rule it out. So I think a lot of Chinese and Japanese, if you look at the gold ETFs in Asia, you've seen a huge increase in buying from that. So I would think that a lot of the Japanese and the Chinese retail investors are piling into gold because they're worried about currency, certainly in China, that if the currency was to weaken further. But always very difficult. You can find a number of stories to justify why the gold price is moving. The fact is it is moving, and up another $25 this morning. So on its way, heading one of the days close to $2,400. So, that's pretty good if you're holding gold shares, although the gold shares have lagged somewhat, but I expect them to pick up soon in terms of this strong gold price.
And then, Greg, keen to also get your thoughts on the Rand. We are seeing the Rand hovering around the 1850 mark. It does look like this has become rather permanent territory for us. I'm wondering what it might take for us to see a stronger Rand, if anything at all, and if that might be something that's on the cards for us later on this year with interest rate cuts.
Well, today already you're starting to see a stronger Rand as commodity prices improve. Generally, we are technically a commodity currency, although we haven't actually, a couple of times in the last 15, 20 years, we haven't really been able to take advantage of booms in commodity prices for various reasons, and recently with the problems with Transnet and our ports. But generally speaking, as commodities improve, the Rand will improve. You're starting to see that now. It means that hopefully mining companies will start earning more money, and that will help our tax collection. So I think that the Rand, although if you take a longer term, that given South Africa's problems, financial problems, that it might be weaker, but in the short term, it's likely to get stronger if commodity prices can hold.
Certainly crossing fingers there, Greg. I'm keen to get your stock pick, but first I'd like us to reflect on counters that have found favor with your industry peers.
My stock pick is Nestlé. We, in the current economic climate, we think the consumer staple stocks should perform quite well, and Nestlé especially, because when you get inflation that's decreasing, the cost of goods sold should get lower, and obviously increase the margins. We should also see a decrease in economic growth, which would put massive pressure on most of the companies in the market. But companies like Nestlé sells products that obviously most consumers need. You can't really go without milk or food. So that's why we think Nestlé is a good buy at the moment, and especially for this economic climate.
I'll go with Britvic. So it's a UK-based beverages business with a 100-year heritage. And it is a business that has shown in the last quarter they had quite a decent set of numbers. I mean, they have been losing some volume, but they've maintained the revenue market share, and they've been able to price for their volume. So they are growing well in Brazil and France. So certainly it's a business that is trading at a decent multiple compared to many peers, and it is a great value creator, good cash flow generator as well.
We're staying local. We're going with Life Healthcare. They recently went ex a special dividend, the R6 dividend that was a result of their imaging asset sale in the UK. So now you've got largely a pure play South African healthcare group. The multiples of all of the remaining listed healthcare groups have come down. It is quite a tight operating environment. We're seeing the margins improve. They've got quite a few network deals. I think they can start to push through more efficiencies and improve their margins. So the multiple's low here at around 10 times. And they do have a bit of an X factor, this Neurosec imaging business, which may help early detection of Alzheimer's. That is making good progress, and that does have a lot of potential. So I think you're getting the core business sort of at a reasonable multiple with some optionality for this initiative, and it could make quite a big difference if it goes ahead.
All right, Greg, keen to get your thoughts on some of those counters. We have Nestle, Life Healthcare and Britvik.
Yeah, well, look, my view is on all those three counters. Personally, I wouldn't be buying them. Britvik, obviously, the share price has really taken an absolute beating. But although they increased their volumes, the thing is that their margins are under pressure because of costs. Now, in that beverage industry, you've got some disinflation, which means that inflation is still going up at a slower rate as opposed to deflation. So until you can see some deflation, I think costs will continue to affect them, although the share is cheap, but I can't see what catalyst will move it in the short term. In terms of Nestle, the chocolate cocoa price is at an all-time high. It's going to put the company under pressure. They won't be able to pass on the costs of the massive increase in cocoa prices to consumers. They will have to bear some of that for themselves. So I think in the short term, Nestle could be, might over the next year find that it's too, that the price of cocoa, they haven't been able to raise prices and affecting their sales. And then on the last one, although it looks very cheap, Life Healthcare, and I agree with everything your commentators said, that the stock was, it's on a 10 multiple, and they've got some imaging equipment in terms of Alzheimer's, that we can't lose sight of the fact of the macro environment. And the macro environment with the National Health Bill coming at some stage, the president said all he's looking for is a pen to sign that bill, and look, I'm sure it will be challenged in the courts, but the macro environment for the hospital groups is not good at the moment. So I personally, neither of those three companies would I be buying at this stage.
And Greg, which counter would you go with today?
So my stock pick is Anglo-American. As I mentioned earlier, commodity prices are rising quite sharply at the moment. You're seeing copper doing well. Iron ore has had its best 2 days in a long time recovering. So Anglo sells copper, they sell iron ore, as well as various other things like diamonds and nickel and metallurgical coal. So as commodity prices improve, I think that this will be very good for mining companies in general, as well as the fact that everyone had written off platinum and said that the future is electric vehicles. Well, the future might be partially electric vehicles, but more hybrid in my view. You've seen that now, the platinum price, rhodium and palladium starting to recover. Anglo has a big stake in Anglo-American Platinum. So the major components of their balance sheet, you're starting to see much better outlook for commodity prices. Anglo has already put on 25% in the last month, but I still think that if commodity prices remain strong, it will continue to rise.
Brilliant, Greg. A pleasure having you on Business Lunch this afternoon. Thank you for your time. That was your midday markets update with Greg Katzenellenbogen from Sanlam Private Wealth.